What is going on, guys? Nick here, back with another video. PayPal has had a rough few months, dropping from its all-time highs last July at $300 to only $190 today. So a few people have asked me to take a look at the stock and what's going on. So in this video, I'm going to cover exactly what happened to PayPal stock, what do I think the business is worth, and if the stock will recover. So let's start with why is the stock falling in the first place? Well, in July 2021, PayPal was sitting around its all-time highs when they reported their second quarter earnings. They saw a beat on earnings, but revenue came in slightly lower than what was anticipated. On top of that, the guidance PayPal reported for the third quarter was lower than expectations, at $6.15 billion to $6.25 billion versus the $6.44 billion expected. The stock fell from its all-time highs to around $270 to $280 per share, where it sat for about a month. Then at the beginning of September, PayPal announced it was spending $2.7 billion to acquire the Japanese buy now pay later firm Paydi. Since Japan is the third largest e-commerce market in the world, this is a pretty significant move that gives PayPal the ability to provide alternatives to credit cards in the market. But investors didn't seem too excited about this move. And this is basically where the really serious downtrend started. A little over a month later, PayPal made huge headlines when a story broke that they were in talks for a mega deal to acquire Pinterest for $45 billion. Now, I look at Pinterest as a massive sales catalog where users can look through different ideas and products and then follow links to where those items are sold. If PayPal could figure out how to make themselves the payment platform for these transactions, it could add a lot to their business, which would allow PayPal to collect not only a transaction fee, but an advertiser fee as well. It took PayPal a whole week of watching their stock drop from $270 to $240 before they decided they were going to announce they weren't going to acquire Pinterest after all. It seems very apparent to me that by the amount of time that passed between the story leak, the reaction, and then PayPal's statement that they weren't looking to acquire Pinterest at this time, that they were definitely in talks to acquire Pinterest. These stories don't just come out of nowhere. But then after PayPal saw the reaction, they knew that they had to back away from the deal. And I also think that integrating PayPal into Pinterest would have been tough. Right now, Pinterest links to websites outside of the company, where PayPal and Pinterest have no control over how the payments are made. It's hard to see them getting value out of the $45 billion they would have to spend to acquire them. After all of that came the third quarter earnings release. Investors were initially really excited by good news when the earnings call began, and the stock started going up. PayPal announced that Amazon would start accepting Venmo, which is owned by PayPal, as a payment option on Amazon. But then PayPal announced its full 2022 guidance. They expected revenues to rise to only $30 billion, short of the $31.6 billion that analysts anticipated. For the rest of the month, the stock continued to fall, and so far, I don't see a bottom yet. Typically, when guidance comes in short of what analysts expect and revenues continue to fall short of what analysts expect, stocks tend to fall even if the otherwise reported information is pretty good. Okay, so now that we have an idea of what happened to PayPal stock, let's take a look at how PayPal's business actually works. With a PayPal account, you have a digital wallet to store money, although you don't have to keep a balance. You also have funding sources like bank accounts or credit and debit cards. The main benefit when you use PayPal to make a transaction is your bank account or credit and debit card information is kept from the seller. So the seller will only receive your money, name, email, and shipping address. That means your bank account number, credit card number, and security codes are all kept separate. PayPal makes its money by charging transaction fees to the merchants who accept PayPal, similar to how credit card companies operate. They also charge fees for adding money to your account through a credit card, but PayPal also has to pay the credit card company some of this fee. Now, PayPal accounts holding a balance aren't actually held by PayPal. Instead, it actually sits in a commercial bank that PayPal will invest in low-return safe investments like government bonds, for example. Now, PayPal has been facing some headwinds. PayPal makes most of its money by providing transaction services for small merchants. But one of the biggest e-commerce hosts for small merchants, Shopify, has been aggressively pushing its own payment platform called ShopPay. While Amazon is now accepting Venmo, Shopify pushing its own payment platform is a more challenging problem for PayPal to deal with. For many people like myself, when I choose PayPal, it's so I don't have to manually type in my credit card information. But now many websites, even Chrome, will autosave and autofill credit card information, so this is becoming less of an issue. Also, by using credit cards to pay, I get cash back or credit card points. This leaves PayPal in a more difficult position as they try to figure out how to remain relevant. But right now, it's not all bad for PayPal. Let's take a look at how the business is performing financially. Looking at the revenue and net income, PayPal is showing a lot of growth. growth, growing their revenue from just over $5 billion in 2012 to almost $25 billion over the past year. We can also see while net income is a little up and down, it is steadily rising. Now, as I said earlier, PayPal makes most of its revenue from transaction revenue, which we can see in dark blue on this chart. The green is from value-added services like subscriptions, referral fees, and credit products. When we look at the revenue versus expenses, we can see their transaction expenses is where most of their expenses go. I also noticed a slight uptick in transaction and credit card losses during 2020, which should be expected, but over the past year, that's fallen to an even smaller amount than we saw in 2019. The rest of their categories seem to be steadily growing with their revenue, so overall this looks pretty healthy. Since there's been a lot of talk about PayPal slowing down, I created a chart showing revenue and earnings per share for the full year for each quarter going back to 2016. Looking at this chart, we can see how COVID gave the business a boost, but the last few quarters are down from the previous trend. When we look at revenue growth compared to the quarter before, so for example, growth from September 2020 to September 2021, we can see this trend a little better. The bump from COVID seems to have passed, and the business seems like it is going to fall under its 20% growth. Okay, so now that we have an idea of how the business is performing, let's take a look at what it's worth. Looking at their forecasted revenue and earnings going forward, analysts see pretty consistent growth for PayPal, with 2023 projected to see $36 billion in revenue and about $8 billion in profits. However, what concerns me is analysts have been revising these estimates over the past few months. 90 days ago, the consensus earnings per share for 2022 was $5.90, and currently that's sitting 9% lower at $5.37 today. When we look at their year-over-year growth, we can see twice they've fallen as low as 15%, which is a very high number, and the top end of the range is around 20%. So I think an appropriate growth rate range for PayPal is to give 16% for the bottom end valuation and 20% for the top end. 16% growth comes out to a fair PE value of 38, and 20% growth comes out to a fair PE of 54. When we look at this valuation charted out, we can see based off of the fundamentals and today's forecasts, our low end projection for the stock is at least 32% upside from here over the next 3 years. But I really expect it should easily outperform this number. The upside is a very impressive 88% with a share price of $366. Now, when we look over at the 6-month stock chart, things look about as bad as it gets. The stock has broken way under even the 200-day moving average, and volume is way up during the sell-off and remains steady, which means that the selling momentum is still here. Volume is what I would pay the most attention to. If volume decreases as the stock goes lower, that indicates that less people are willing to sell at that price. If you start to see the stock having some spikes back up and a lot of volume, this could indicate a price where there's a lot of interest and a possible bottom. But right now, I don't see that happening. So to answer my question, will PayPal stock recover? I think the answer is pretty obvious, and that is absolutely. The business itself is very strong and performing very well, even if they face some upcoming challenges. The issue right now, though, is the stock hasn't shown a clear bottom. All the momentum right now keeps pointing towards a sell-off, but as the stock keeps falling, get excited, because the potential for future returns keeps going up. This is not a stock that I would panic sell if you ended up buying at the top. Be patient and wait for the recovery, as painful as it is. Now, I would recommend that you guys check out this video right over here next, and as always, thanks for watching.